Hey guys, welcome to another episode of the Island Wealth channel. My name is Runika Mira, and if there is one model that you want to understand, then it is the Bitcoin 24 model. In this episode, we are going to walk you through that model, recently presented. The model has been created by a guy in India, an expert, and also is supported by Michael Saylor. So this is the episode that you want to know and that you want to watch. Right on. Hey, my name is Runika Mira, and if you are here for the first time, hit that subscription, comment below, subscribe below, because you want to know. I am from the beautiful island of Curacao, and I'm talking about island wealth. How to create and manage your wealth. If you have been only saving on an account, on a savings account, then you might want to watch this, because we are going to talk about Bitcoin, we're going to talk about stocks, we're going to talk about real estate, we're going to talk about gold, all the major assets, even art, all the major assets in the world. I'm an economist, and I'm studying money, and I'm studying economics, economies of small island nations and large nations like United States, China, etc. And you might want to take a look at this chart. And I'm having some comments. If you have any comments, just post your comments below, because I want to bring them also in the show, and I might answer your questions that you might have. So look at this spreadsheet, and this spreadsheet is a great spreadsheet about the Bitcoin and about basically the assumptions about Bitcoin, about money in the world. So what do you see here? What do you see here? It's a spreadsheet model. You can download the spreadsheet model easily. Just look for Bitcoin 24 model. And then what you see here is, you want to look at this spreadsheet. I'm in the macro tab, but there is also the cover. And the cover is saying this is just Bitcoin 24 model. It's open source. It's a 21 macro forecast with micro models and Bitcoin strategies. So you might have heard about Bitcoin, and you're thinking like, okay, what are the assumptions? What is this all about? And a macroeconomic model, or a Bitcoin model, helps you simulate the situation. It could be money, it could be bonds, it could be anything. We're going to dive a little bit into this model today, so you can understand it and how you can change the levers and how you can make your own assumptions, etc. We're not going to cover the whole model today, but we're going to cover the basics of the model. And if you have any questions, ask them below. Even after the sessions, this episode, you can ask the questions. So this is the cover, and then I'm going to the macro tab, because in the macro tab you will see the world of money and the world of places where you can store your wealth, where you can store your savings. Now imagine you have a high-paid job, and you have some savings. You have some $100, you have $1,000 of savings, and you can put them on the bank in a savings account. And when you put it on a bank in a savings account, you know for sure that you're going to be your money is going to decrease. Why? Because if you receive 3% on your savings account, it might be safe. But if inflation is about 7%, and why is inflation 7%? Because actually they are printing the US dollars at the rate of 7%. During COVID in 2021, they printed it at 40%. So imagine you're receiving 3%, but inflation, the rate at which they are printing the money, the US dollars, and all the other currencies in the Caribbean, then your wealth is getting decreased by 4%, because 3% savings, you're happy at the end of the year, but inflation has been 7%, so now you're losing 4%. If inflation is 15% and you are only receiving 3% on your savings account, then your money is being decreased by 12%. And there is a rule of 72. It means that if your money is being decreased at 12%, and that means in 5 years or 6 years, 72 divided by 12, 6 years. In 6 years, your money is going to be half. So, let me say that again. If you put $1,000 on a banking account, you're receiving 3%, while actually the prices are going up by 15%. Then your money is losing 12% per year. Your purchasing power is decreased by 12% per year, and if that continues, in 6 years, your $1,000 is being worth $500. So while you're still seeing the $1,000, or you might be getting the interest rate of 3%, you will be happy, but what is actually happening is that your purchasing power is decreasing. Look it up. It's the rule of 72. Look it up. So that's why people like me and other people in the world, investors, they are looking at this Bitcoin thing, and they are looking at where can we store our purchasing power. If you earn $1,000, if you earn $10,000, if you earn $100,000, where can we store it? Can we store it in real estate? Can we store it in art, gold, BTC? Now what you see here in the macro tab, you see that BTC is actually currently in 2024, it is 1 trillion market cap. You see that gold is 16 trillion market cap, and the market cap is just the units of gold times the gold price, and you can look at the gold price every time, every day on Yahoo Finance, on Simply Wall Street, on different charts for free. If you look at art is about 18 trillion worth right now in the world in 2024. If you look at equity, those are the stocks, and look at one of the episodes yesterday, I went to the stocks of the largest companies in Brazil, and then what you have seen there is you have equity. So people store their money in Nvidia, in Tesla, in Shell, in any stocks in the world. You can also be buying these stocks because the capital markets are open for you. You can have an interactive brokers account in the Caribbean, and you put your savings in there, and you will get a better return than the 3%. Of course, there is risk, because if you are investing, there's always risk. The only risk that we know is if you don't want to have any risk, that means that you're dead. When you're dead, you don't have any risk because nothing will change because you have died. But as long as you are living, there is risk. You can go out right now and run after below a car. You can cut your fingers. You can fall. Anything can happen. Something can happen with your heart. Something can happen with your health. There is risk because we are living in a volatile world, in a changing world. And risk might be also good because of the risk, that means that something is changing. Because of the risks, you are able to buy Bitcoin because it can go down, it can go up. Imagine it went up, 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 up all the time, then it would have been certain, and that means there is no risk, and then you cannot buy it. But because Bitcoin is right now 65,000, on my other chart here I see 67,000, but in the Bitcoin model you're only seeing here 65,000. It can go down, volatile, it can go down, and you can buy it for 60, or you can buy it for 35. Now, I want to tell you, if you didn't know, you don't have to have $65,000 to buy Bitcoin. You can buy $100 of Bitcoin in an ATM. You can buy $100 of Bitcoin, maybe exchange it for somebody who already has Bitcoin. There are some banks, brokers in the Netherlands, maybe in the US, that you can buy it. So you can buy $500 of Bitcoin. But real estate, a villa costs on average maybe $700,000 in the Caribbean. There are some villas of $1.6 million in the Caribbean. There are villas where we live here in the Caribbean, beautiful Caribbean, Curacao. There are villas of $3 million. But you cannot buy that villa. You cannot buy a piece of that villa because you have to buy the whole villa. Now Bitcoin is just like a villa, and that's why we put it here in the market caps. You see it here, the market caps of all the things that you can be buying. And real estate, the villa, the luxurious villa, maybe at Spanish Waters on Curacao, or Coral Estate in Curacao, or maybe at Cas Grande. Those are all neighborhoods with beautiful villas. Yantil Marbella Estate. You can buy that villa, and the villa is in that bucket of real estate. So there are 330 trillion real estate, and in there you also have commercial real estate, an office building, an apartment. That's estimated at 330 trillion in the world. We're talking about the whole world. So imagine there are 8 billion people, almost 8 billion people in the world, and if they would buy all the villas, they need to spend 330 trillion in the world. Just to give you an example, Curacao, where I'm living right now, the whole economy is 2.5 billion US dollars. So if you want to buy the whole real estate in the world, villas, luxurious villas, apartment, commercial real estate, you need many years of a whole island like Curacao needs to spend maybe 1,000 years, more than 1,000 years, to be able to buy all the real estate. So I'm giving you this example so that you can know what are the numbers that we're talking about. If Curacao, with 2.5 billion economy, if we all on Curacao, the island of Curacao, we spend our whole annual salaries, profits, and everything, that's called the GDP, gross domestic product of a country, of an island. If we spend our 2.5 billion US dollars economy, we didn't consume anything, we didn't buy anything, but we spent that whole income, then we wouldn't be able to buy all the Bitcoin right now, because it would take us 500 years to be able to buy all the Bitcoin at a price of 1 trillion. So 1 trillion is an enormous amount of money, of value, that is stored in Bitcoin. Now think again about that. Something which just has 15 years of existence, Bitcoin was produced by Satoshi Nakamoto in 2009, and already after 15 years it already reached 1 trillion market cap. And right now there are 19 million Bitcoins already in existence. There are only going to be 21 million Bitcoins ever, because that is in the software code, and the software code, nobody can change it. It takes enormous amount of working together to change it. It is not a central place, a bank, an organization, a government that can change it, because the Bitcoin software runs all over the place. I'm having a Bitcoin running on a computer. Somebody of my friends have the Bitcoin software running on their computer. You can buy a Raspberry Pi computer of $200 and you can run it to just verify and check that Bitcoin. That the software runs exactly as has been produced by Satoshi Nakamoto. So that's it. You have millions of people in the United States, in Europe, Latin America, El Salvador, Brazil, all over the place. Those are called miners. They are mining Bitcoin every 10 minutes. And then they are making sure that this does not change. And there are rules programmed about how Bitcoin can be created. Every 10 minutes, there is 3.125 Bitcoins that you can earn. And it was 50. Then after 4 years, it went 25. And after 4 years, it went to 12.5. And after 4 years, it went to 6.125, and then the next time it will go down. So every 4 years, the halving of the Bitcoin. Now, gold is also a store of value, because gold has worked for thousands of years as a store of value. And you have a rock. And why is gold a store of value? Because you don't have plenty of gold. Around 1 to 2% of gold is being mined every year. So you have a stock of gold and you have little gold being discovered. When Elon Musk goes to Mars, and if he finds gold and he brings back gold, that means that it will be the end of gold as a store of value on planet Earth. Because we found a way to get a lot of gold back from Mars, and then bye-bye gold. So in that situation, Bitcoin will be scarcer than gold. It's already scarcer than gold, because nobody can change the code of Bitcoin. Let that sink in. Then you see the art. Art, people also store their value. The wealthy people, family offices, you will see all kinds of art, Picasso, all kinds of Monet, all kinds of art, sculpture. And the reason is that you cannot produce a Monet. You cannot produce a Picasso. If you find a violin, a Stradivari, I think it's called Stradivari violin, you cannot produce any more of that. It's very, very scarce. That's why people store their energy, their life energies. They work 8 hours. They have businesses that work for them, and when they have that profit, they're earning the dividends, they will store it in somewhere. Because I hope you understand right now that money, fiat money, the US dollars, or the euros, or the guilders, or the Caribbean guilder, or the Eastern Caribbean dollar, those are paper. That's paper. And that's just a way to store your wealth. But if they can print that paper, like they're printing the US dollars, the Federal Reserve, the Fed, the United States Central Bank, if they can print that currency, it's called fiat currency, the currency of the government, then it means that they can devaluate the value. So while you are working very hard to earn dollars to become a millionaire in your business, high paid job, the US dollars value has decreased. One US dollars 40 years ago, although it's the same, it's not the same purchasing power. You have been seeing that, right? With $100, you used to be able to maintain a whole family 40 years ago. You could buy, with $30,000, you could buy a beautiful villa, but 40 years later, the villa now costs $700,000 or $1 million. What does it mean? It means that the dollar's price, the dollar's worth, has become, the dollar's value has become less. The value of the same dollar has become less, and that is what we call inflation. Inflation is not the prices going up. Inflation is your money becoming less valuable. Ask the people in Lebanon, ask the people in Zimbabwe, ask the people in Venezuela, ask the people in Haiti. You will understand, and even in Turkey, you will understand what it means. Argentina, you will understand what it means that your money is getting worse. Now, there are a lot of people that are looking at the United States, and they are looking at this chart also, and they're studying this Bitcoin model, and they're saying, where should I put my energy? With energy, I mean you work 8 hours, you work 40 hours a week, maybe even 80 hours. If you're a doctor, you work 80 hours a week. Shout out to the people at Curacao Medical Center. Shout out to other people working hard, businesses in the Caribbean. You're working 70 hours, and what are you doing with the receipts of those 70 hours? You make a great living, and where do you want to store that? That's what this chart is about. So you can also store it in real estate. You can buy a villa, you can buy a property, you can buy some apartments. Robert Kiyosaki, Rich Dad, Poor Dad, presenting some books here. He is not sponsoring this show, but he teaches you how to store that money in real estate, buying real estate. And then you can go to the bonds. So you see 330 trillion, it's going up, 330 trillion US dollars is the market cap of all the real estate in the world. That's an estimate, of course. Then you can go in bonds. You can go to the government bonds, to the private bonds, and then you would find that there is $300 trillion in bonds. Now, what is a bond? A bond is just a debt instrument. So you imagine you have the United States. United States of America has a deficit because their expenditures are higher than their revenues. Their expenditures on social affairs, on social security, on Medicare, all kinds of things, building bridges, and their revenues are the tax revenues. We have been showing that. Yesterday I also showed that with my own macroeconomic model and investment model of Curacao. You saw profit tax, you saw direct taxes, you saw the indirect taxes, which is tax on goods and services. Those tax incomes are less than the expenditures. That means you run a deficit, and then you have a bond because you want to build a bridge, you want to finance all those goodies that you want for the less fortunate people. You want to give benefits, social benefits, increase, maybe you want to pay a universal basic income. The governments want everything. They want a lot. They want to spend on maybe football, sports, fields. They want to construct, so that's why they tax their people. So, but if you run a deficit, then of course you need to create a bond. And the same goes for all those people in those companies having equity. They also have to have bonds for their operations. So a bond will pay you a fixed income. It will pay you the interest rate, 300 trillion. Now, the US debt is $35 trillion. So out of these bonds, the global bonds, the US basically has a 10% of the total global bonds. Imagine that. One single country has 30% of the bonds. And they are keeping, United States is keeping building this because the next president, whether it is Ms. Kamala Harris or Mr. Donald Trump, they are not going to decrease the expenditures. They are not going to increase the taxes. Kamala Harris, Vice President, is saying she's going to raise the taxes. But if she raises the taxes, then a lot of wealthy people will go out of the United States. So she will come back and say, okay, let's not do that. That's not good. Because capital is mobile, and people who are investing in Bitcoin, they are invested not because they want to evade the taxes, but if you have a villa in the United States, they can tax that villa. If you have a company, equity, they can tax that. They don't have some taxes on art, I think. If you have gold, I don't know if they can tax the gold. Yes, of course, they can tax the gold. They can tax everything. They can tax everything. Even the interest you're receiving from the bond, they can tax that. The only thing they don't tax is the currency, which is 120 trillion. You see? So that's how the world works. So I don't believe that the United States is going to decrease their debt. Some people say that it's unpayable, it's not going to pay it, and we have seen in previous episodes of all the models in the world, we have been looking at the debt to GDP of different countries, and we saw yesterday also, I think, we saw that the debt to GDP of the United States is 120%. So if the United States had all its income and it didn't consume anything, and that's not possible because everybody would die, for 1 year, then they would not be able to pay their debt. So people, think about that. People need to consume because consumption might be 80% of your income. We have to dive deeper to see if the United States people are saving. But the government, at least, is not saving. The government is spending, the United States government. So even if United States had their whole income and they tried to pay down the debt for 1 year, they would still have 20% deficit to pay the debt, because the debt to GDP is 120%. The debt is much higher than the income. Think about that. If United States were Argentina, Brazil, Lebanon, Turkey, Venezuela, if the United States were not the world reserve currency holder, if they could not print the US dollars, of if the US dollars was not the fiat currency that always has trust in the world, then my estimate is that something would have happened to that United States dollars. Because that's exactly what happened with Venezuela, with all the other countries in the world. So the United States has a very, very special position because they can print the global reserve currency. You do not see immediate effect in their deficits. And all the other countries, Curacao, Argentina, Lebanon, Iran, Libya, Venezuela, all Brazil, they will see their debt and their currency. If they have too high a debt, they will see their currency drop. That's how it works. So a lot of people expect that to happen exactly. So if you are in the Caribbean and you are storing your wealth in the currency on a savings account, and your savings account, your currency like Curacao, like the Eastern Caribbean currency unit, dollar, like for Turks and Caicos, you're using the dollars. Jamaica, $1, last I saw was about 100 something Jamaican dollars. If your currency, you are living in the world and your currency is pegged to the dollar or fluctuating around the dollar because your economy is dependent on the dollar, then try to understand that the world is changing. Because if the dollar goes down, then your purchasing power is also going down. And you are not going to be able to buy this iPhone anymore. You're not going to be able to buy maybe the speaker. You're not going to be able to buy luxury goods. If the dollar goes down with 10%, 20%, suddenly, because maybe Saudi Arabia is not accepting the dollars only exclusively as the currency for their oil, and they already have that decision, they made that decision, then the demand for dollars is going to go down. That's why people are looking at this Bitcoin model. You understand the context now, right now? So if you have any questions, ask them questions, and we will check that. Right. So the currency, there is 120 trillion US dollars in currency. And they're printing this right away. Now, how does this work? How does it work? The model. So inflation, all the yellow parts are things that you can enter in the model. All the yellow parts are things that you can enter in the model. And you start with 900 trillion USD. So all the capital that you can store, all these things are capital, gold, BTC. We're talking about the capital market or the store of value market. How do you call it? Equity, real estate, bonds. It's 900 trillion. In 2045, which is about 21 years later, and they're using 21 years as a long-term period in this model, because there are 21 million Bitcoin only, of which already 19 million have been mined. We're only having 2 million, and look at this. The pension funds are coming, BlackRock is coming, the family houses are coming, the Wall Street is coming. Why are they coming? Because there is an exchange traded fund. Since January, there is an exchange traded fund. And just like you can buy a stock of Tesla, you can buy a stock of Shell, you can buy a stock of Nvidia, just like that. Calling your broker, Interactive Brokers, they are not sponsoring this episode, but calling them, and then you have a wealth manager who's helping you with this, with you managing your wealth. Maybe you're doing yourself. Maybe your wealth manager has data science, produces report, does some simulation with you. All those things we teach them, and we teach our investing clients in our Python Island Wealth Management course, creating digital assets and automating your life and business with artificial intelligence. That course is going up open half January, and maybe we're going to, we don't know if it's going to be the last one, but that will be the second edition, the improved edition. We are very, very happy with all the people who participated. Thanks for Clive, thanks for Jeff and Mr. F. I'm not just telling all the people. Thanks for them that we created this tremendous program, Python Island Wealth Management. So you're looking at this, and you're looking at the projection to 2045. This is possibly what is going to happen in 21 years. If you just have a child, in 21 years, when your children go to the college, then there will be approximately 3.4, I don't know what quadrillion, that's quadrillion, because trillion is 900 trillion, and then maybe that 3.7 quadrillion in assets in the world. And then you see that Bitcoin can potentially be 68 trillion. Now, how does it work? How can Bitcoin grow to become 60 trillion? If you look at trace precedent, you look, that means that this formula of 68 trillion is based on two things. It's based on the price of BTC of $3.2 million times 21, because in 2045 there will be only 21 million, and also in 2060 there will be only 21 million. After 2045 there will not be more than 21 million. So while this amount of assets is going to continue to grow, they're going to continue printing bonds. There will be probably 836 trillion. Look at this, it went from 300 trillion to 836 trillion in 21 years. It more than doubled the bonds. Why? Because the governments are continuing with their debt. And if you don't believe these assumptions, then you can change these assumptions, because this is the base case. This is just the base case and the bear case. And the bear case for Bitcoin is if Bitcoin performs normally, like it has been performing a little bit less than it has been performing actually during the past 15 years. So bear and bull, the bull, the horn's going up, that means it's going up. And bear, the bear goes through the lift. I think the bear goes to the window. Sorry, the bear goes to the window, it goes fast below, and the bull goes through the lift, slower, slower, slower. So you see Bitcoin right now going slower, slower, 65, but it can also skyrocket, because there are a lot of these other assets. They are looking at Bitcoin. So how is it possible that Bitcoin can become 68? There will be, the estimation is 21 million, and there is risk to everything. All these are assumptions. Don't quote me and say, hey, I made you financial advice. I give you a financial advice. I'm not giving, nothing here is financial advice. I don't know your personal situation. You have to make your own calculations, validate this. I'm just showing you this for entertainment and for educational purposes only, because I'm a trainer, coach, investor, and I want to help island people create more wealth. That's why you are here, right? Or you are living in a developed world, in the United States, in Europe, in the Netherlands, in Canada, and you want to live the island wealth lifestyle. You want to visit the islands 2 or 3 times a year, have a wonderful vacation, surfing, windsurfing, going on a boat, dining, salsa, music. You want to live this lifestyle. That's why you're listening to this episode, right? So now, for you, even if you don't live on an island, now you know it, Island Wealth channel is also for you, because it's about the mindset, it's about the lifestyle, it's about going to Seychelles, going to the Caribbean, going to Barbuda, going to Antigua, Turks and Caicos, maybe Jamaica, having some sound. I'm going to bring some sound in here. You see, the Island Wealth lifestyle, wealth is not only about money, wealth is also about freedom, and Bitcoin is about freedom. Wealth is about your health. You have to take sports, you have to do some sports. Wealth is about options. You want your children to be fed well, 3 meals a day with vegetables, etc. You don't want your kids to eat only on cans like I used to when I was younger. You want your kids to look at an open fridge and see food. If you want a steak, you want a steak. If you want to drive, you want to drive. If you want to dream about a car, a Porsche car, 911, you want to be able to achieve that. Those are options. If you want to say, I'm going on a holiday for 2 months, I'm going on a holiday for 2 months. Then you need your own business. You need to have some capital working for you, and Bitcoin is a potential capital. Remember, you don't need $65,000. Educate yourself. You can buy a Bitcoin, a piece of Bitcoin, a 10% of Bitcoin, 5% of Bitcoin. The choice is yours. The choice is yours. So look at this. How can that be? So in this scenario, Bitcoin will be $3.2 million, and then there will be only 21 million. Now, how would that work? It would work because all this capital, all these people, they're waking up. The family offices, look at this. No, let me just put it here. In 2024, because there is an exchange traded fund, and the exchange traded fund is basically BlackRock is offering that. A lot of other big, BlackRock is one of the biggest banks, investment companies. They own almost everything. They own all the stocks, everything, Microsoft. Look at the investment, when there is the earnings calls, and they invite the investors, and you can be an investor. If you buy a stock of McDonald's, you can look at the earning calls online of McDonald's, of Tesla, of everything. If you don't know that, that's why you visit the Island Wealth channel, so that you know that. So it's not only putting your savings account in the bank anymore and being safe, but it is, where can I invest, to get the investment mindset. Alright? So you can buy everything, all the stocks, and all these people who own the real estate, who own the equity, who own the art, the family offices, they're starting to think, how is this possible? How is this possible, this young thing, Bitcoin, 1 trillion? And before, they used to just say, hey, this is sad, this is bad. This Warren Buffett, the biggest investor in the world, 90 years, I think, or over 90 years, he said it is The other friend of Warren Buffett said it was rat poison. So it has become from rat poison, from something for criminals, something bad. It now has become like this is the wildest, the fastest horse in the race. And all this money, 900 trillion or 899 trillion dollars, is now going to chase this $1 trillion. Do you see how it works? So if something volatile happens in the world, more wars, or even if they keep printing this whole thing, they keep printing this, keep printing bonds, they keep printing money, currency, fiat currency, and then it will be more. Look at this. So don't look at Bitcoin, only look at this. Only look at this level here. What's going to happen? They're going to continue trying to dig some gold at 1 or 2%. They're going to produce maybe art, but the art is very stable. There are not going to be many more Monet or many more Picassos. Art is going to be stable. Maybe equity. Yes, more companies. The companies are going to grow. The company will continue to grow. If they're printing money at 7%, on average, the equity is going to be 7% growth. So they're going to continue to do this. More companies. Real estate, they're going to continue building real estate. And then bonds. Governments will continue to run deficits all over the place. More wars, more Russia against Ukraine, more Israel against Palestine, more maybe China against United States. We don't know. I hope there is no war, but if they make more wars, then they're going to print more money. If there is another COVID, then there are going to be more bonds to finance. Everybody wants to have free money. They're going to create more bonds. It's not going to stop. So this is going to create, and then money. They're going to print money. The European Central Bank, the Fed, the Bank of Japan, the Bank of China, they're going to continue printing money. This is going to grow. And then this one here, this guy here, there's only 21 million. So there comes a time, and everybody's betting on that all this capital is going to run through the door looking for a chair that they cannot print more chairs. Because if you have a chair that they cannot print more of it, better than gold, then you want that chair. So they're going to enter this. They're going to be chasing the 21 million. And when they're chasing the 21 million, you see here, there is already 90 million right now. And then 20 million, this is going to stay stable. And then that is going to be fueling this 3.2. Just a summary. If Bitcoin goes for gold and demonetizes gold, that means that gold becomes just jewelry, luxury, but gold is not there anymore for storing your wealth. Because now you have digital gold. You cannot take your gold through the airport. You cannot move your gold. You cannot split your gold. You cannot take your gold anywhere. You cannot send your gold to all the continents in the world and coming back to the Caribbean instantly with programs, with Python software program. You cannot do that with gold. But with Bitcoin, you can do that. Digital. So if Bitcoin takes as a horse, takes the gold horse, then what you're going to do to see is Bitcoin is going to 16x. So how it works is the Bitcoin 1 trillion will become 16 trillion, and when it becomes 16 trillion, it means that it has now the potential, the energy of gold. Some people are going to sell their gold. sell their stocks, whatever, and invest into Bitcoin. And then the price of Bitcoin will go up. It can also go down, but it can go up. And then you have the energy flowing, and that is going to increase the market cap. Can you understand that? So imagine I have a river here, and the river is called gold, and the river has 16 trillion of volume of water in it. And then you have another river here, but they are not connected, and that river is only a small river with 1 trillion liters of gallons of water in it. But there is room for another 16, 15 trillion. Now what happens if you connect those two rivers and people start moving out of gold and go into Bitcoin? What you see is the river of gold is going to be emptier, and the water is going to flow to the river of Bitcoin. And if you only have 21 million rocks in the Bitcoin, there will be more water per rock. And the water is actually the value, you see? So there is 16 trillion liters, gallon of water in gold, energy stored in gold, and people are looking, and it is one market, they are communicating. Those are the same people who can invest in gold, invest in Bitcoin. The water is going to flow to Bitcoin because Bitcoin is scarcer. So this model, it's projected that already in 2025, look at this, remove the arrow and trace precedence. When you trace precedence, it means that how is this formula calculated? I know this because I'm building these kind of models. I'm building macroeconomic models. I built models for 12 islands in the world, in the Caribbean, and I can also build a United States model. And that's the next thing I'm going to do, because I want to understand the economy of the United States better. I want to understand the debt. I want to understand the consumption. I want to understand the investments in the United States. And also China is on my list. So the biggest two largest countries in the world, China and United States, I want to build them. And maybe I also build one for Europe, just to analyze, to simulate. So I know a little bit about modeling. How does this 17 calculated? You see, it takes the 16 of gold, and what it does is it multiplies this with D55, and D55 is nothing more than the annual increase of gold. So the inflation, the innovation, and the monetization factor. So what you have to check, forget all the other ones, is that there in this model, in the base case, they are saying that gold is going to go with 5% consistently, and then art is going to grow with 9%. Those are only assumptions. Equity is going to go with 10% per year. Real estate 7% per year. Bonds 5%. And currency 7%. And this currency, that's actually the average I told you about growing of currency during the last, I think, 100 years. If you look at the M2, you can go to the Fed website, and you will see the history of currency growth, of how much dollars did they produce. Mind you, during COVID, this was 40%. So this is an average. Then you have asset. Then you have to ask yourself, how do they calculate this 5%? How is this 5%? So I got my 5% to extrapolate, to calculate the gold, the art, the equity. You see here? So if I remove that, this number here, what do you expect? Trace precedence. It's the previous year or the previous years and then times the 5%. You see? So this is very conservative. Gold's price is going to increase with 5%. If you don't believe that, you can go to the gold price and do your own calculation. My Python Island Wealth Management students, investors, when they follow my course, the course is going to open again in January, half January. Make sure you stay till the end so you know exactly where you need to raise your hand to go. To raise your hand if you want to hear more about this. They can just import the gold price and they can verify this themselves. They can import the equity, average equity, and they can verify themselves. They can import the currency and verify that it has grown by 7%. So you will also be able to do that if you join my program. If you join another program that I have, the Island Wealth Investment Academy, that's a 3 days training program, transformation experience, then you will also be able to do those things in Excel spreadsheets, etc. basically. And the Python Island Wealth Management is an 8-week program, so it takes 8 weeks to teach you how to understand Python, artificial intelligence, and do your own analysis and become great. So these are the percentages to grow. So you see how this model is calculated. So you get a picture right now how this whole thing is calculated. I just want to look at this formula because I want you to verify the models like this and come up with your own assumptions. When I study a new model, simulation model, and I will dedicate more of my time to this, to the Bitcoin community, to understand this model. And why am I doing this? If you want to sponsor the show, just do it with a like, with a share, with a comment below. Then you are sponsoring this show because more people can actually then see what is happening here, can understand what is money, can understand what is happening in the world. So that's the way to sponsor: sharing, subscribing, commenting, asking questions. And you can join my community. That's the 5 ways to support this program. And if you join a program, if you join one of my programs, you will support it with fiat currency, and I will be very thankful for that because I put a lot of knowledge and a lot of research, my team, into this. When I'm studying this model, I'm just looking critically. Do I understand this? What happens if I do this? What happens? Not because Michael Saylor produced this, contributed to this, I'm going to believe Michael Saylor. I respect Michael Saylor. Thank you, Michael Saylor, for providing all this knowledge for free, because this model, he could have kept this whole model for himself, but no, he's sharing this model, the global macro. We remind you, we're only in the global macro situation. There is an individual, corporate, institutional, indebted nation, wealthy nation, United States, all these scenarios in there. Today we're only going to the macro sheet. So I'm studying this to understand what is happening, and I'm studying with you. If you have any questions, ask the questions below in the comments, and then if you are studying this, we will help you study this. If you want to study it, of course, privately, then we have to create another program for you because you need to invest in that. But if you're listening to the Island Wealth channel, you already know what is happening because you understand this model right now. Trace precedence. How is this formula calculated? You see here, we got something like the year 2021, the X. So this is the year 2045 divided by the year. Look at the formula to the left, top left. Divided by the year 2021. 2024, and then they're taking 121. So that's a way to calculate the compounded average growth rate. So this means, because it's exponential, it's not only divided by 21, it is basically the 66 trillion in 2045. If you take the 1 trillion in 2024, how much compounded interest, what is the percentage growth to get to that? So the horse called Bitcoin, that's a beautiful horse, the best breed, fast lane horse. It's the latest horse with only 15 years old. If it grows with 20.8%, that's what you see here. If it goes with 20.8% per year, year over year, so from 2024 to 2025, 20%, 20.8. 2025 to 2026, 20.8%. If it goes over and over 20%, it will reach 66 trillion. I think it's 68 trillion or 66 trillion. Let me take it away. 68 trillion. So while your interest savings account, like I said before, is growing with 3% per year, maybe 3.5% if your bank lost you in the Caribbean or in the United States, while it's growing with 3%, and inflation and the printing of the money is 7%, the stocks are growing with 15%. How much are the stocks growing in this scenario? Equity is growing with, let me say, equity is growing 10%, you see? Your savings is growing with 3%. Now Bitcoin, in this scenario, Bitcoin is growing with 20%. And this is only the bear case. The bear case means it's very, very conservative. Now, what does it mean? Gold is growing 5% on average during 2024 to 2045. Art 9%. Okay, equity 10%, but Bitcoin 20%. What do you think is going to happen with the percentage? It means that, let me put this formula here, trace. It means that at the beginning in 2024, Bitcoin is only 0.1% of the total 900 trillion. So the 1 divided by 900 trillion here, the 1 divided by 900 trillion, 1 divided by 900 trillion, that is 0.1%. So Bitcoin, the fastest horse, who's projected here to run 20% increase faster every year to grow, is only 0.1% in 2024. And this assumption, it's stating, according to this assumption, it can become 1.8% in 21 years. So imagine starting from 0.1% and going to 1.8% of total global capital. So it's very conservative. Bitcoin, only 1.8% of global capital, but because global capital is going to multiply, it's going to be like 3-4 times. Look at this. From 900 trillion to 3.4 quadrillion, it's about 4 times. 4 times. So the total global wealth is going to be 4 times. Everybody's going to feel like, hey, I'm wealthier because I have more digits. You know, look at the currency. The people who want to become millionaire in US dollars, they're going to say, hey, I went from 120 trillion, I went to 400, let me check this, from 120 trillion currency I have on my bank account, and I went to 497 trillion. So basically 4 times, 5 times, yeah, 5 times. 5 times. 4 or 5 times. More money. But the money, you cannot buy more because it's more money, more digit, more fiat currency. But it doesn't mean that your purchasing power is increasing. Because remember, the currency has been printed at 7% per year. So you're storing your wealth in something, you're getting more digits, but the digits are, each digit is becoming less valuable. How is your Kool-Aid? How is your Kool-Aid? So your Kool-Aid would mean you're drinking Kool-Aid, but they're putting more water in your Kool-Aid, so you don't get the taste anymore. You cannot get anything. Remember the river? This is another analogy. You're drinking Kool-Aid, but you don't taste anything anymore because they are putting 7% water in your Kool-Aid. So you get more water, but you don't taste anything anymore. That's going to happen. So that's the 7%. So don't look only at the digits, but look at this. The units did not increase. The units for the Bitcoin, the units went to 21 max, and the units the value went from 1 trillion in 2024 to 68 trillion. That's 60x. 68x. 68 times your value, while the units remain the same. So basically, if you have Bitcoin, in this scenario then, everything is going to be more cheaper for you. Okay, how is gold increasing? Gold is from 1.8% of the total capital market to 1.2. So gold will become there is going to be some demonetization. Demonetization means that some of the gold is going to be taken away. The power of gold is the stored energy in gold, stored monetary energy is going to flow to Bitcoin. So this doesn't say that gold will be less than 16 trillion. It means that gold is 16 trillion and gold will grow actually to 45 trillion. That's very interesting because the models I've seen before would suggest that basically Bitcoin is going to take away the power of gold. But in this model, you see that gold is actually increasing from 16 trillion in 2024 to 45 trillion. So gold might be 4x, something like about 4x, 3x, let's say 3x, 3 times, while Bitcoin, so gold is going, the market cap of gold is going to 3x assumption, while that from Bitcoin is going to 68x. So what you see, the growth of Bitcoin market cap is going to be faster than the growth of gold. Now these are just assumptions, of course. Based on all these inflation numbers, based on the innovation growth, and based on the CPI growth, CPI is the Consumer Price Index, based on the monetization factor of gold, it's going to decrease. So let's say gold is 100% monetized, and the monetization is going to be 4% less every year. So basically gold is going, the pool of gold, the water in the gold is going to drop at 4% per year, maybe towards Bitcoin. That's what this is saying. Water is going to flow from gold, the gold bucket, which is 16 trillion in 2024. The monetization of gold is going to drop with 4%. So imagine a pool with a river with gold in there, or maybe a pool with gold in there. Water is coming in, but water is flowing out 4%. Gold is getting less monetized. Art is going to stay the same. Equity is going to increase monetization. So monetization, what does it mean? It means that you are using gold as a store of value and not anymore only for your nice collier, your ring, but gold is used as money. That's what this means, monetization. So if you buy a villa and a villa to live in, then the villa is not monetized. But if you buy a villa just to store your money as a second villa, a third villa, etc., that means that the villa now has a premium on top of it. The price is higher because you are an investor and you're coming in as an investor and you're saying, hey, I want to buy this villa. Somebody wants to buy the villa to live in, $300,000 US, right? No, let's say 700,000 to buy the villa, to live in. That's the price of the student. Somebody just got a job. Now you have $1 million US and you are an investor. So you want to pay 300,000 extra on the villa. That's the monetization, because you want to get that villa because you don't want to store your money, your energy, your monetary energy anymore in dollars. So you have this dollars, $1 million, and you want to get rid of it. That's why you put a premium of 300,000 on the value, the utility value of the villa. Something like that. That means if gold is less monetized here, 4% per year, then gold will decrease to the real value. The price of gold will decrease to the real value. Now art, nothing is happening with art. Equity is going to continue to be monetized. Real estate is decreasing in monetization. That means that actually real estate also, this is conservative because they are saying here that real estate is not being used anymore. Money is going to flow out of real estate, money that is kept there because it has a monetary value. The real estate has a monetary value from investments, etc. Money is going to flow there out. I think this 2% is really conservative. And bonds also going to be demonetized. So they use this currency, demonetized. So they use these factors to be able actually to calculate the growth. Because out of all this, let me see, BTC is the 25%, 30%. Now this price of BTC, we are running with these prices. So how is this 25% used? Trace dependent in this time. Dependent means this formula, what other formula in the spreadsheet is depending on this 25. You see here that the 65 here is dependent. The price is dependent on this 25. And if you go back to 65 and you say trace precedent, then you will know that it's going to another spreadsheet. Okay? So this 25 is working in the model. So this is being picked up from another spreadsheet. This monetization factor is important. The growth rate is important. So let me check again for BTC. And let me trace precedence, and you see that this price is this 81 times 20. Okay? When you look at this one, remove arrow, this price, trace precedent, is calculated from the previous gold plus everything below, which is 5%, which is inflation, growth, innovation, and monetization factor, right? When you look at this one, and you say trade precedent, you see that this gold, 5%, that we use to calculate, it's actually the inflation, innovation, gold, monetization, and that is the 5%. So we are running with 5%. We are increasing the gold, we are increasing the market cap of gold of 5%, etc. How is this 5% calculated? It is inflation, innovation, and gold monetization. Okay? How is this art calculated? Trace. You see that art is the inflation growth, the innovation growth. Those are independent of the art, but then we take the art monetization factor. So what they're doing here is they're taking inflation, which is the price, the average price increase, and they're saying, okay, this gold is going to increase with inflation. Then we put innovation growth. This is just a percentage. Because we innovate, we become productive, more productive. Okay, 3%. And then probably also in art. More 3% in productive in art. And then they say, hey, we want this monetization factor. Is it going to increase or decrease? And in the case of gold, it's going to be less monetized. So that's why they add the -4. In the case of art, you see there's no 0%. So they're saying, assuming here, that art is going still to keep their monetization, because art is actually, you buy art for monetization, not because you like it. That's the assumption here. So that's why art is growing with a 9%, which is higher. So here, the reason why the art is going with 9% and the gold is growing with only 5% is because, and the same thing, inflation, they have the same inflation here and they have the same innovation. But the main reason is, so if you didn't have monetization, differences between gold, art, equity, real estate, all of them would have increased with 6 plus 3%. And maybe CPI. Right? But because you have monetization, then they're saying here the gold is inflation, innovation, and the monetization of gold. So I understand their basic, how this thing works. Let me look at equity. How is this 10% calculated? You see equity is 6%, 3% of innovation, and they have equity monetization 1%. So that's where they come from, 10%. Now, I like this because they could have just given us, the people who produce this model, could have just given us these growth rate. And if they give us only this growth rate without showing us how it is calculated, everybody would have asked, yeah, but why 5% gold? Why art 9%? Why equity 10%? I don't believe that. When you build models, you need to explain this 10%. And that's exactly how they show us here. Because if you understand this model, you know exactly, okay, inflation is going to be this. What you can do is, of course, understanding now the inflation. If you don't believe this, let's run another scenario. Let's just run a scenario. I think we are done here. Before we're done, before we run this scenario, I just want to point you to the left, to the right, sorry, right of the spreadsheet. And you see here the whole thing. I think this is in 2045. You see gold 45 trillion. You see BTC 70 trillion. It's the 60. It's here the 68, right? So they're projecting all these things. The 3.7 quadrillion. What they're showing you here is a square, and in this square, what is the percentage? So real estate is still going to be a huge part. I would say 1/3, because this is 1/3, this is second 1/3, and this is the whole third. So real estate is going to be 1/3 still. I think that's a conservative. So we are not saying people are going to dump their Manhattan 1 billion or let's say 100 million villa in Manhattan, or 100 million villa in Miami. They're not going to. They're going still to invest in real estate. It's going to be 1/3 of the capital in the world. Equity is going to be about 1/3. You see? Again, 1/3. Because I think this square, I see 3 big squares within. This is the first one, this is the second one, this is the third one. Equity, still 1/3. But now, bonds is going to be 1/3 of 1/3. This is about 1/6. Currency is going to be 1/6. And then in here, I will see it a little bit more than 1/6. And in here, you're going to have art, BTC, and gold. So you see BTC has grown considerably. What is happening here is that BTC, this is the whole square is going to grow, and BTC is going to take a little bit more, basically 68 times more than 2024. And gold is going to grow, but gold is going to grow less than Bitcoin, because gold is being demonetized. I like this model. And now, if you don't believe this whole thing, what are you going to say? You're going to change inflation. Now let me change inflation, because if I believe that inflation is 6%, I don't believe anything in this model, and I urge you not to believe anything yourself. Don't believe, verify. Imagine now we say inflation is going to be less. No, more. Let's say inflation is going to be 20%. What does it mean? They're going to print more money. They're going to monetize more. Inflation is going to be 20%. Boom. When I change this, you see that the whole picture will change, of course, in 2045. Here. 2045. So it went to 48 trillion. So what was it before? 6%. If it is 6%, then you have a 3.7 quadrillion total market cap of all the assets you can invest in the world. But if you change this inflation, because inflation is fueled by monetary printing of money. If they put the printer press on, you're going to get more inflation. And why is that? Because you have value of real estate and everything in the world, and the money is growing faster. Fiat currency is growing faster, and that is driving inflation. Inflation is nothing more. Imagine you have 3 villas in 21 years, and you are tripling the fiat currency. Inflation is nothing more than the value of your money relative to the villas becoming less. So you're going to pay more for the villas. In the first scenario, if you have $1,000 for 3 villas in 2021, you're going to pay $300 per villa. But if we go from 10,000, from 1,000 to 100,000, no, let's go to 1 million. We print 1 million, we go from 1,000 to 1 million units. That everybody who's holding those 3 villas, because the 3 villas are the only thing you can buy in the world, now the villas are going to be $330,000. It doesn't mean any ditches. It means that the money relative, the fiat currency relative to the villas has dropped. First, you only had to put 300 digits. You had to bring 300 digits to buy 1 villa. And now you have to bring, we don't believe in the digits anymore. The digits is called the dollars. We don't believe that anymore. Bring me 330,000. No, I think 300,000. 330,000. Bring me 330,000 digits. First 300 digits, 330 digits. The total economy is 1,000 digits. And now bring me 330,000 digits, my friend, because you printed so many digits. That's what can happen in 21 years. 21 years is just one generation. So if inflation is 15%, I want you to just look at this number. This number here is 3.7 quadrillion. Look at what's going to happen, because inflation is driving this model. Look at what happens if we put inflation at 15%. Let me see. Yeah, 15%. Some people believe that inflation is actually 15%. What does that mean? If you look at inflation, how they calculate inflation as a Central Bureau of Statistics, you would see inflation is a basket of goods and services, mostly goods, and those goods, they calculate the average price of those baskets. Maybe, let's say there are 500 goods and services. The Central Bureau of Statistics would go, and every week, every year, at least once a year, I think they do it sometimes monthly basis, they would take the price of those 500 goods and services. And then they calculate the price. That's inflation. If you look at the basket of goods, I don't want any of those goods. You don't also want any of those goods, because I don't think there is an iPhone. I don't think there is an electric vehicle, BYD, the latest. I don't think there is solar panel in that basket. I don't think there is this microphone in that basket. Anything of luxury, going on a vacation, it's not in that basket. So the inflation figure that you're getting and that everybody is focused on is much higher. You have to calculate your own inflation. So what is your lifestyle right now? What products are you using? What services are you using? And only those products, you calculate that. If you come to my Python Island Wealth Management course in January, mid-January, I will teach you how to calculate your own inflation. Because then we will take your basket of the goods and services that you do, that you like, maybe also if your family, of your kids, if you have kids, it's another inflation number because you're using diapers, you're using meals for the kids, you're using health care for the kids. Total new inflation. If you take a millionaire wants to buy assets, wants to buy maybe a Lamborghini, wants to travel, wants to have this. If you take a billionaire might, he doesn't want any jet, he doesn't want any yachts, he wants to travel around the world. There are billionaires, they don't want to have any luxury, big houses. It's a total different inflation. But they want to spend maybe in a restaurant, they want the best wine, $600. It's not in the CBS, Central Bureau of Statistics, CPI. So inflation is a vector. It means for everybody, every place, there are many prices in there, and you can calculate your own inflation. Now the government, to help us, they calculate an inflation number for us, and everybody, the wage people, the wage earners, every negotiation, the pension funders, the people having a pension fund, the people living on the social benefits, they all look at that inflation, but the real inflation might be 15%. And why do we know that? Because the inflation on the assets, the inflation of the assets, equity inflation, look at this. We just saw that equity is a different inflation, right? So if you take inflation growth 15%, you will look at this immense growth of the total capital market, the market cap of all the assets that you can invest in. It has now turned into 20.2 quadrillion. What does it mean? Money is relative. There is enormous amount of money in the world. You see here, there is enormous amount, row number 28. There is an enormous amount of fiat currency in the world. But you better know the difference between money and real stuff. Money and things of value. Let's think about that one. When you look at this model, you want to look at, and you are living the island wealth. Thank you for being here. It has been taking a long time, but I don't want to stop because I want to give you this long content. And later on, if you are only interested in small bites, I will try to let my team of artificial intelligence agents cut it in pieces for you in small bites. But I'm telling you, you have to know the difference between currency and hard money. Currency and the real valuable stuff. And when you look at this chart, when you look at this table, you know what the difference is. So if you tell me you want to become a millionaire in US dollars, or in lira, or in pesos, or in Bolivar, Venezuelan Bolivar, or Argentinian pesos, or whatever, Turkish lira, be a millionaire in Turkish lira. Be a millionaire in Argentinian pesos. I love the people from Argentina. I love, our queen is coming from Argentina, Maxima. It's a maximum beautiful lady, smart lady. I'm very thankful that our king is married to her, bringing a little bit of tango into our kingdom. But look at this. So I love Argentina, but the money, the currency is has had a lot of trouble. President Milei is trying to solve that thing right now by stopping, by reducing the government, taking some drastic measures in there. Look at this, the currency. So look at this. When you look at 20.1 quadrillion capital market, what does it mean? Inflation of 15%. How would your life look? I believe that this is a more realistic scenario, because inflation is actually 15%. So let's assume that it is not the inflation that we had before. Yeah, we started with inflation, and the inflation was just fake. Let's assume that it's not 6%, but it's actually, now I'm going to play with the model. It's actually 15%. This is the world we're living in. This is the world we're living in. You see that? This is the world we're living in. Now, what do you see here? You see here that Bitcoin is actually still 68. That's interesting. Bitcoin is 668 trillion. And you see here that all the rest was blown up. You see that? So basically they're saying that Bitcoin is going to grow. The assumption is Bitcoin still is going to increase with 25%. This is interesting, because you change the inflation in the Bitcoin 24 model. Bitcoin is still going to grow. Base case, bear case, 25% on average. But now, Bitcoin is going to be less than the total market cap. Not 1%, but 0.3% in 2045. If you look at a chart to the right, you see that Bitcoin is still maybe small percentage. Gold is blown to 250. Art and everything is going bizarre. And why do they believe that Bitcoin has value? Still have value? Because actually everything, the digits just got higher. The inflation being 50% means that your digits are going up. Actually, your digits are going up with 15%. Remember, we started with $1,000 with 3 villas, and now what they're saying is maybe there are going to be more villas. The value of the villas are going to be $330,000, because now we're playing with 1 million. We went from 1,000 to 1 million, so we multiplied by 1,000. We got more digits, but we still have 3 villas. This is inflation. Your money is becoming worth less. Now, if you want to study inflation, if you don't believe in this 15%, just drop your comment below. Say, I don't believe in the 50%. I think it's going to be lower. Then, if I receive 100 comments about this inflation from different people, I will let my artificial intelligence agents look at this. Then, after 100 comments, I don't believe it, then I know for sure that I need to dive into that. And I promise you, I will then dive into that inflation to show you the inflation of many, many, many countries. You can pick one country and I will show you that in a graph. As you know, I've been doing data science. I've created the magic graph. And the magic graph is what you will learn to create when you're joining my Python Island Wealth Management, creating digital assets with artificial intelligence. Now, what is the digital asset about? It's about something like this model that works for you continuously. A digital asset is a software program backed by artificial intelligence that works for you while you're sleeping, automating your life, automating your boring stuff, your work, creating sales opportunities for you, automating everything. I can make a digital asset that just increases this inflation from 15% to 100%, and then storing this Bitcoin model every time. After every 5 minutes, I'm just increasing this 15% with 5% and then storing it. If I want to do it right now, I need to do it manually, and a digital asset backed by artificial intelligence can help me. I could send this picture to artificial intelligence and let artificial intelligence write me a story about what would the world look like if there is 250 trillion in gold. This is very interesting. So I like this thing. Now, the last thing I want to show you is I want to take away this this case, and I want to go back to the original case of 6%. You can change anything of this, entropy, main cause, all these things. This is interesting, all these things. But if you want to go to the other case, then you go to the BTC tab. I want to stop with this. If you want to go, you go to the BTC tab. So here you see, where is that 25%? You know, the 25%, 25%, the 25% here, the 23%, 20%, 18%, it's decreasing. Why are they having 25% here, and then it's, I think in what year? In the year 2030, it has become 23%. Why is it becoming in 2035 20%? So why is the growth of my horse, my Bitcoin white horse, I think it's an Arabian horse, one of those beautiful horses that the sheikhs, the kings of the I don't know how do you call them, but the royal family, when they're playing polo, they have those beautiful breed of horses. If you know what horses I'm talking about, and how much a horse is worth, one of those horses, put it down below, because maybe a horse is also a store of value. Yes. Some of those people, they buy the breed of the house to store their currency, the power of their currency in it. Are you understanding right now? Why is this horse going slower? Because you would expect, they would say, this goes 25%. Why is this happening? Now, I studied this and this. When you trace the precedence, remember this. When you want to understand how is this formula calculated, you go trace precedence, because you want to know what are the indicators that precede this indicator. When you want to know how is this variable, this 25% used in the model, where? Then you say trace dependence. And when you say trace dependence, you know for sure, hey, this 25% is used in that 65. But let's go back. Where does this 25% come from? When you trace that, you have to double click this, pop up, and then you will go to another tab. This formula is telling you it's the BTC tab, and you see below here, this is the BTC tab. So when you click there, you go to this 25. So what are we seeing here? We are in a different tab, and this is the final part. You see that this 25% growth, it is assumed that it is slowing down, and then it's going to go stable here at 80%. 18%. So what does this mean? This means that the 25 in the bear case, so in the case that you're going down, you're very pessimistic. That's the bear. And the bull, the horns going up, then you are very optimistic. So are you bearish or bullish on Bitcoin? Tell me below. Tell me below. After this presentation, are you bearish or bullish? You there on LinkedIn, you're working hard. You might be a project manager, high-paid CEO. Are you now bearish, going down, negative on Bitcoin, or are you bullish, going up? Remember, everything is for educational purposes only. Nothing here is financial advice, because then you guys will sue me. Nothing is financial advice. This is only for education, and for education only. Do your own research. This is the bearish part. It starts with 25%, and then you see here it's decreasing with 0.5%, and in the steady state it's 18%. So this model tells you you're starting with 25%, it's going to decrease 25 to 24.5, decreasing with 5%, and then ultimately it becomes 18%. This is a good assumption. Why? Because we do not expect Bitcoin to continue to grow with 25% all the time. We think, or the people who made this model think, when Bitcoin grows and gets a higher market cap, it will be less volatile, so it will grow, but it will grow at a lower pace. I can understand that thinking, because if you are a business and you're starting small, then first for instance, you're going for Curacao and you grow very fast, 50%, and you get all the business in Curacao. Then you grow to Caribbean, you're expanding, boom. All right, you grow with personnel, you got a team now. You started alone, but now you have a team of 20 people, and you have the Caribbean. Now for Latin America, you're having 100 people, things are slowing down. You got difficult. So for going to the Caribbean, to Latin America, it's going to slow. Your growth, you cannot get the 50% growth that you started with when you started on Curacao. So the same with Bitcoin. When you're growing, you're maturing. I think they are assuming here, okay, suppose they're slowing down. But these are only assumptions. This is the bear case. Now if I select here the base case, then what you see here, boom, then Bitcoin is growing with 50%. That's the base case. That's what Bitcoin has been doing. I'm looking here at the chart, and I think Bitcoin got year to date, I need to check that for sure, but year to date Bitcoin got a different, how much did Bitcoin grow during the last half year? Year to date. Year to date means until today, from the start of the year. So this is very aggressive, and of course if you say 50% growth, it will have impact here, because now you changed in the BTC model and you change a macro, and everything will be here. You didn't change the inflation here, but everything will be different because your growth rate is now 50% and then decaying, of course. See here? So this will produce a 3.9 quadrillion, let me say 3.9 quadrillion market cap of the world in 2045. Just because Bitcoin grew more, and you see the Bitcoin here in this base case. I have to check if the base case is what we have right now. Probably, if they assume that, then Bitcoin will grow to 281 trillion in 2045. Imagine with your savings account of 3%, inflation of 15%, and now Bitcoin growing at a compounded average rate of 29%. All over, the horse is basically running 29% constantly. And this 29%, remember, that's just the figure in 2045 divided by the figure in 2024. Imagine giving your kid a piece of thing, an asset class, that's going to 281 times the value. I'm not saying this is going to happen, but assume that this model becomes a reality. Assume that they are printing on top of it. Now I'm going to increase this thing to 15%. You see what I'm doing now? I'm changing the base case and I'm changing the 15%. Look at this. Normally what I do is I will change the colors here, so I know for sure that I change this parameter and I change the base case. Then, you see, look at this. You are seeing something which is this base case, 50% growth, and the inflation is 15%, which is more realistic. This is a world of 20.4 quadrillion market cap. So these numbers are basically gigantic. These numbers are like crazy. And for you to just check what has been happening. What has been happening? What is this? Do you believe that? So in a world of huge, look at the right, in a world where everything is blown out, the digits are crazy here, the inflation is 15%, the base case growth of Bitcoin is 50% and declining. If we have this world, then gold is going to be monetized at 250 and Bitcoin is going to go to 280 trillion. So in this case, Bitcoin and gold are actually, Bitcoin is going to be, in this base case, Bitcoin is going to be higher market cap than gold. That is very interesting. So you see, when you play with inflation, when you play, I urge you to play with all these numbers yourself. Now, I just want to put this thing back to the number that we started, 6%. And now I'm going to show you the bull case. So if you don't believe in this growth, you can actually change this whole thing. Let me see. Can you change it here? Reduction. I saw the reduction where you change this whole thing. So this is base case, and you can actually change this 2.5%. Say you say, hey, it's going to be, let me change this thing first. Let me teach you something, show you something. When you're going to change something, change the color in orange, and then you know that you change it, and that you're saying here, I'm going for 10%. So what do you expect? Pause to happen. You're right. What will happen is the 50% will start and it will drop with 40, yeah? It will drop to 30, 20, etc. And then it will drop until it gets the steady state of 20. So it will go from 50, 40, 30, 20, and then stay at 20. Understand? So you can play with your own assumptions. So I'm going to do this, enter, and then you see, boom, you see the graph. But now you understand this model because you say, hey, this is just an assumption. Assume that Bitcoin goes 50%, like it's growing probably right now, because that's what they call the base case. And then it drops to 20%. So I believe what you're saying here is, I believe Bitcoin is going to maturity very fast. In 2028, it's going to be, boom, everybody's going to be in there. The large ETF people, the pension funds, the money, the big BlackRock, everybody's going to enter very, very fast in growing, putting their money, changing their money from bonds to Bitcoin, etc. more aggressively. Boom, 2028, then it's going to be stable. So this will only tell you that you're dropping from 50% to higher. Okay? I wonder what would happen if you go to the macro. You will see the effects. You see that? You will see the effects right away, because then what we just changed has been increased here. Now, to finally, I have an exercise for you. Imagine that the base case is now that we go from 50% and we go up to 100%. I wonder if this would work, because they have constructed the model right now, and maybe the model will crash. But if we crash the model, that's how I like it, because then we know more how the model works. So let's try to crash this model. So I'm just saying it's not 50% to going down to 20%, but I'm saying actually that this is higher. This is actually maybe 70%. You see that? Boom. So what is that? 70%. I'm saying I believe that Bitcoin is actually going to be more volatile. I don't know. It's going to increase. So 50% is not what we're having. It's going to grow more. You see that? So it's going from 50% to 20 to 70% stable. And probably we got some weird figures, because if you go to the macro, you see here it goes to 50% to 70%. So this is also, we have tested this, it goes to 50% to 70%. I'm not seeing the growth of 5% per year. So maybe we need to go to minus. Yes. So I'm turning the minus 25% because my end state is higher. You see here? This is not finishing. Let me see. It's going to grow. It is continue to grow. So by doing this, I just tested the model. I stress tested it with a different assumption. I stress tested it, and I'm going to go back to the normal model, which is the base case. If we change this to the bull case, the bull case is the case where we go 75% and addition. Look at the base case and look at the bull case. So if you take the bull case, then the numbers are going to be 75% growth. So they believe that Bitcoin is going to starting at 75%, and then it's going to decrease. So I think this decrease is more reasonable, because as it matures, it will slow down. All right. Let me go back to my final notes. Let me go now to my final notes, people. So, we have seen this. Let me see. I'm going for my final notes now. This has been a 2-hour episode. I wanted to show you everything I got on this Bitcoin model right now. We have only covered the 2 first sheets, BTC and the macro, global macro. As a global macro investor and global macro economist, I'm also very interested in the global numbers, and we have seen today the total capital market in the world. These are my final notes. My final notes are, I hope you like it. I hope you enjoyed this. It has been long, but if you are still here, it means that you are interested to know what is money. Then I want to invite you to join my bit.ly/Island Wealth. You will join the VIP launch of Island Wealth community, and when you join, you will get more of this information, and you will raise your hand. By doing that for free, you have raised your hands and telling me, I want to know more whenever your programs open the doors. When my programs open the door, it means that in a very limited amount of time, maybe 1 week, it opens on Monday and on Friday it closes. Right now we have programs running. They are not open for anybody because I'm working with the investors, I'm working with the people, I'm working with people improving the programs, improving the experiences, because all my programs are experiences. But when they are open, you will be notified as first. Most of the time there are only 50 spots. Sometimes I increase it to 100 spots, but the programs are accessible for all the people in the world. There are 8 billion people in the world. We are focusing on all the small islands in the world. I have to calculate stage how many people there are on that market between 8 and 65 or 8 and 80. Because if you are 80, you have money to invest, you want to leave something for your kids, you're still welcome. If you are 65, 67, you are retired, you are building your family, you are 30, in your 30s, and you're building your family, wealth family, whether you are living on an island already or whether you are living and dreaming about the island wealth lifestyle, you're welcome. And when you join the VIP launch, by putting your name and email, clicking there, putting your name and your email there, you will be notified whenever the programs open. We have 3 programs coming up: Python Island Wealth Management, creating digital assets with artificial intelligence. We have the program Island Wealth Investment Academy, a 3-day fastest way to get to understand, become an investor, and knowing what matters, what money is, actionable steps. And we also have a couple of other programs working on. So when you join, you become part of the community. And you will get more than the episodes. You will get more. You will get interesting things. So just below this, there might be other programs which are open, and you can join the waitlist already. So go to there, bit.ly/Island Wealth, and click also below. There are other programs open, and you will be joining the waitlist. It doesn't cost you anything, only 1 click, email, name. I will not bother you with a lot of spams. I will tell you the story of my life. I will tell you the poverty to wealth story. I will invite you to tell your own story to me, communicate with me. Okay, so if you are listening to this on LinkedIn, I want you to connect with me. I want to follow me. Share this information. Even if you don't want to join, you share this information, you put a comment, you subscribe. If you are on YouTube, you subscribe, you put a comment, you forward, even if it's a negative comment or even if it is a question, put it down here and I will be looking at them and I maybe put that into my program. So if you want to know more about inflation of different countries, of your countries, inflation and your country, inflation and your country, your island, put it there. And I might pick your island to show the inflation, because we have said that there is inflation of 15% on average. Let me just look at your country. Okay, that's it for this day. Have a great, great, great weekend, and I will be seeing you again. And we're also going to Suriname for the Bitcoin conference over there, because Bitcoin is already going to Latin America, to Middle America, to Suriname. I consider Suriname part of the Caribbean, but sometimes it can be Middle America. So Surinamese people, where do you consider yourself? So I will be doing something very, very nice in Suriname by looking at this model and then talking about the Suriname model and the Suriname economy. I will be connecting this model to the Suriname economy and maybe looking at a wealthy nation or at an indebted nation scenario. And also institutions, corporates. I will be continuing my story. Okay, thank you very much, and hopefully you enjoyed it, and stay safe. This is for wealth for your family. Do something good.